For many years, the world of Bitcoin felt like a niche community. It was a space for early adopters, computer scientists, those deeply skeptical of traditional finance. Many mainstream voices dismissed it as a fleeting trend or even a speculative bubble with no real substance. But a quiet yet powerful shift is now taking place, one that demands our attention. Governments, the very institutions that create and manage national currencies, are beginning to accumulate Bitcoin. This is not a minor event. It is a profound signal that the global financial landscape is changing, and that Bitcoin's role within it is solidifying in ways few could have predicted just a decade ago. This development forces us to ask a fundamental question: why? Why would a government, which has the power to print its own money, choose to buy a digital currency it cannot control? The answer lies in the very nature of Bitcoin itself. It is often called digital gold for a reason. So while most people are waiting for the right time, governments, banks, and big investors are already securing their positions. That's your cue, because by the time everyone else catches on, the price won't be where it is today. To understand why governments are interested, we must first understand what Bitcoin is. At its core, Bitcoin is a form of digital money. It exists purely in the digital realm, built on a technology called the blockchain. You can send it to anyone, anywhere in the world, at any time. You do this without needing a bank or any other financial intermediary to approve the transaction. This peer-to-peer nature is one of its most revolutionary aspects. It empowers individuals to control and transfer their own value directly, much like handing someone a physical piece of gold. It runs on a network of computers, open for anyone to join and participate. Unlike the money in your bank account, a digital entry in a private ledger owned by your bank, Bitcoin is secured by mathematics and cryptography. Every transaction is recorded on a public shared ledger called the blockchain. That ledger isn't in one central place. Thousands of copies are held by participants around the world. That distribution makes the system resilient and transparent. Anyone can view transaction history, but coin ownership is protected by cryptographic keys. You, and only you, hold the private key that lets you spend your Bitcoin, giving you true ownership. People call Bitcoin digital gold because it mirrors key properties of gold, adapted for the internet age. The decision by governments to acquire Bitcoin is not happening in a vacuum. It is a direct response to growing economic pressures challenging global financial stability. The primary driver is inflation. Over the past several years, many leading central banks have engaged in unprecedented money printing, quantitative easing. This was done to stimulate economies. This was done to manage massive government debts. This was done to navigate crises. While often well-intentioned, creating trillions of new currency units makes each unit worth less. Your money buys less today than it did yesterday. This erosion of purchasing power is a quiet, relentless tax on savings. Inflation hurts ordinary citizens most. It punishes savers. It punishes retirees on fixed incomes. It punishes anyone whose wages don't keep pace with rising prices. Governments aren't immune. As they print more money to pay debts, they devalue their currency. That risks the trust of citizens and international partners. This creates a dangerous feedback loop. Some governments are now seeking an escape hatch, an asset like a life raft against devaluing fiat. Beyond inflation, there's geopolitical risk and dependence on other nations' currencies. For decades, the US dollar has been the world's primary reserve currency. Most international trade is conducted in dollars. Many countries hold large dollar reserves. That gives the US huge economic and political power. Other nations are growing wary of that dependency. They want neutral assets not controlled by a single country. To reduce vulnerability to sanctions. To reduce vulnerability to US Federal Reserve policy decisions. Bitcoin is global and politically neutral. It fits this role. Holding Bitcoin is strategic diversification. It stores part of national wealth in an asset that is censorship-resistant. It is seizure-resistant. No single country can freeze a Bitcoin wallet if keys are held securely. No central bank can inflate the supply to devalue it. resilient, and outside the direct control of other geopolitical powers, preparing for a more uncertain future, you know? One of the most important ideas to understand about Bitcoin is scarcity. In simple terms, scarcity means something is limited and hard to get. Gold is valuable because it is scarce. You cannot just create more of it whenever you want. You have to spend a lot of energy and resources to mine it from the ground. Bitcoin was designed to have this same quality, but in a digital form. The rules of the Bitcoin system, written into its core code, state that there will only ever be a total of 21 million Bitcoins. This number is final. It cannot be changed by a CEO, a government, even its creators. This fixed supply is a radical departure from how regular money works. Central banks can, and do, print more money whenever they feel it is necessary to manage the economy. When they create new money, the existing supply becomes less scarce, and therefore, each unit becomes less valuable. This is the root cause of inflation. Bitcoin, on the other hand, operates on a predictable schedule. New Bitcoins are created as a reward for miners who use powerful computers to secure the network and validate transactions. This reward, known as the block subsidy, is cut in half approximately every 4 years in an event called the halving. This halving process means that the rate at which new Bitcoins are created slows down over time. This built-in, unchangeable monetary policy makes Bitcoin a hard asset. Its supply is inelastic, meaning it does not increase when demand for it goes up. This is what protects its value over the long term. No matter how popular Bitcoin becomes or how high its price goes, the creation of new coins will always follow its slow, predictable, and decreasing schedule. For governments and large investors worried about the endless printing of fiat money, this verifiable scarcity is Bitcoin's most compelling feature. They can look at the code and the blockchain and confirm the total supply for themselves. The rules are transparent and enforced by mathematics and a global network of computers. This is why Bitcoin is seen as a hedge against inflation. It is an anchor of scarcity in an ocean of monetary expansion, offering a way to preserve wealth in a world where the value of traditional money is constantly being diluted. Another core concept that makes Bitcoin so powerful is decentralization. To put it simply, decentralization means that there is no single person, company, government in charge. Your bank is a central authority. It controls your money, can freeze your account, can reverse transactions, must follow government rules. If the bank's central server goes down, you cannot access your funds. Bitcoin works in a completely different way. It operates on a peer-to-peer network of thousands of computers, nodes, spread across the world. Because there is no central point of control, no single entity can change the rules of Bitcoin. To make a change to the protocol, a vast majority of the network participants would have to agree to it. A government cannot order Bitcoin to shut down because there is no headquarters to raid and no CEO to arrest. They cannot force the network to block a transaction because there is no central administrator to compel. It is a system of rules without rulers. Bitcoin can be held with a private key, even memorized. While Bitcoin has many powerful features, it is crucial to approach it with a clear understanding of the risks involved. The most obvious risk is price volatility. The value of Bitcoin can and does experience dramatic swings. It is not uncommon for its price to rise or fall by 10% or more in a single day. This volatility is partly due to Bitcoin being a relatively new asset class. Its market is still smaller and less liquid than traditional markets, gold, stocks. So large, trades can have a big impact on the price. You should be prepared for these fluctuations and view Bitcoin as a long-term investment, not a get-rich-quick scheme. Another significant risk is regulatory uncertainty. Governments around the world are still figuring out how to approach Bitcoin. While some are adopting it, others may try to impose strict regulations, heavy taxes, outright bans. A negative regulatory decision in a major country could have a significant impact on Bitcoin's price and adoption. While its decentralized nature makes a global ban impossible, unfavorable laws could make it more difficult to buy, sell, or use in certain jurisdictions. There are also technical and personal security risks. Bitcoin is a bearer asset, which means whoever holds the private keys controls the coins. If you lose your private keys, the paper you wrote them on is lost in a fire, or you forget your password, your Bitcoin is gone forever. There is no customer service number. Be vigilant against scams, phishing attacks, fraudulent exchanges. Education on self-custody and security is not optional. It is essential. Finally, it is important to remember that past performance is not an indicator of future results. While Bitcoin has performed incredibly well over the last decade, there is no guarantee that this will continue. It is a new technology, and there could be unforeseen challenges or even the emergence of a superior digital asset in the future. For these reasons, a prudent approach is to only invest what you are willing to lose. Smart investors often allocate a small percentage of their portfolio to Bitcoin, such as 1 to 5%. This allows them to benefit from its potential upside while limiting their exposure to the risks. If you have weighed the risks and decided that Bitcoin is right for you, it is important to proceed carefully and methodically. The first step is education. Spend time learning the basics. Understand what a private key is. Understand what a public address is. Understand what a recovery phrase is. Read articles. Watch videos from trusted sources. Familiarize yourself with how wallets work. This foundational knowledge is your best defense against mistakes and scams. Do not rush into buying without understanding what it is you are buying and how to keep it safe. The second step is to choose a safe way to buy your first Bitcoin. For most people, the easiest way is through a reputable and well-known cryptocurrency exchange. Do your research and pick an exchange with a strong security track record. Make sure it's compliant in your country. Create an account and verify your identity, like opening a bank account. Once your account is set up, deposit local currency and purchase Bitcoin. Start with a small amount you are comfortable with. The third and most critical step is to take control of your Bitcoin by moving it to a wallet you control. Leaving your coins on an exchange is like leaving your gold in someone else's vault. Software wallets on your phone or computer. Hardware wallets for stronger security. For long-term storage of significant amounts, use a hardware wallet. It's a small physical device that keeps your private keys offline. When you set up your wallet, you'll get a recovery phrase, typically 12 or 24 words. Write the phrase down carefully and store it offline in a safe place. Never store it digitally on your computer or phone. This phrase is the only backup for your funds. Educate, buy on a reputable exchange, move to self-custody. You can participate in the Bitcoin network with confidence and security. The fact that governments, the issuers of fiat currency, are now adding Bitcoin to their balance sheets is a historic turning point. It is a clear and powerful signal that the world of money is undergoing a fundamental transformation. Bitcoin's core property, absolute scarcity, decentralization, resistance to censorship, are what make it a compelling solution to the problems of inflation and currency risk. Thanks for watching. Please like and subscribe. It will help us grow and reach more people.